What's up, guys? It's March 7th, 2024. Pretty good day for the Bulls. They had a gap up with continuation, and it looks like a measured move was hit. I'm sure if we went like body to body, it would have got hit here, but nonetheless, the breakout was a good guide. So, strong gap up, breaking out of yesterday's range, right? See the bar right here? And bar one's continuation for the Bulls, so that's great. This is a breakout mode pattern. It's talked about in Al Brooks's course. He talks about a reversal above the high, reversal above the low. That's a breakout mode pattern because it's two failed breakouts, so traders are trapped. And that goes for a couple legs higher. Full disclosure, I did not trade today, so this is coming from like a not trading perspective. I studied breakout mode many times, but I've only caught it once live, and I thought it was interesting how the first day I don't trade and I noticed it like right on bar 6. I was like, oh my gosh, it's just a breakout mode pattern. That makes me pretty curious about like how many times have I actually missed a breakout mode pattern. Right, here's another breakout mode, reversal above bar 1, reversal below bar 1, goes for a few legs higher. See, almost the same pattern, price position is a little bit different. But that's really interesting that I didn't trade today. That's like the first 6 bars I noticed, and I talk about the first 6 bars all the time in every video. So I think it's gonna be interesting to see what kind of things I'm picking up without trading. I'm still gonna be doing these videos. I'm just taking a breather because since the beginning of the year, I have made money. I have come within $200 of getting paid out, and then I lose like $1,000, $2,000, or $1,200, $1,300, and almost blow the account out. Then I grind it back up, and then I lose it, grind it back up, and then I lose it. Something similar happened to that a few days ago, so I'm just taking a breather. I'll still be posting trades on my shorts because I have a lot of backed up footage for a while, so I'll still be posting, but I'm just taking a active day trading break. I still watch the markets. So yeah, breakout mode. First 6 bars, more bullish. Continuation with bar 1. Then we have a small pullback, and they break out of the first 6 bars range, and it goes for a measure move. They actually get 2 bar of the first 6 bars range. Tight bull channel. First reversals fail. This is a leg 1, leg 2, leg 3. The market goes sideways into the EMA. First touch of the EMA after the bar has been trending. After the market's been trending, the bulls have been trending. This should be like over 2 hours. If you check out the Blue Book chapters, they talk about this setup. Good reversal on the EMA, and that leads to a new high. You did have to sit through a pullback. Kind of looked like the market was going to turn around. Here I'm looking at this wedge top, so that is a little suspicious right there. However, it ends up being a pullback and a wedge bottom. 3 pushes down. What is going on? I'm malfunctioning. I just went through it. Never mind. Okay. So yeah, the wedge bottom, bull flag here. There's also kind of a range play. Right there is about a range. Market tries to break out, ultimately fails. It goes for the 1 hour target of yesterday's range, which is breakout targets. It goes sideways for more than half the day. Well, it goes trends sideways, big up, big down. Market gets a tight trading range towards the end of the day. But first, let's talk about this wedge top. So wedge top into resistance. This creates a double top, higher high. Bears get 2 legs down here. Leg 1, leg 2, pull back leg 3. And then the bulls are still buying the EMA. We can see the EMA is acting as support. Wicks are showing buying pressure. And the bulls go for another buy the close rally up until they almost hit the target. They came 1 tick below. I think after this bar, it's safe to get out. You also had a chance to get out around this level here for 10 minutes, like right here and right here. Maybe not 10 minutes total, but within these 2 bars, you had 2 chances. So to get close to the high tick. To buy the close rally, it looks kind of weak. Bar 50's indecision. This can be seen as a pullback on a lower time frame. Leg 1, leg 2, reversal. First trend line break. This becomes a bull flag on a lower time frame. Here's the channel. See, it breaks and that pulls back. That's a bull flag, and that goes for a breakout for a few legs. Just see if we're trading it from a bull flag perspective. Yep, look, 1 hour was met right here for the people who took bar 51 from a bull flag. Just so you know what, let's just talk about this real quick so you guys know what I'm talking about. But I keep saying bull flag. See, See the highlighted box? So it's more like here. So here's the bull flag from there. Wait, where was the highlighted box at? So here's the bull flag. Triangle, double bottom here. And this, what we see with these three bars are like, what is that, 251, 252, 254? That's the wick of the candle I was talking about. That's it. I was like, this is the trend line break on the 5 minute. So the trend line break is actually right here. I was just showing you the flag. So this is the trend line break. This is the wick. And then this candle shows the doji, the strong close. So that's the trend line break, first fade lead. Tested the highs and it broke out. So where are we now? See how I drew that on the 1 minute chart and it lines up trend line break, bull flag. First trend line break in a strong micro channel, so the context for this micro channel makes sense for a bull flag. And then they go to the high of the day, make a new high, and they sell off for the rest of the day. The market goes range bound. Bears get a few legs down, but it's very sideways price action. Here, pull back sideways, deep. Look, bar 67 looks climactic. It looks like leg one, pull back leg two, and then go sideways. This is a test of the range lows put in earlier on bar 26, or I guess it would be bar 39's test. Yeah, testing the support here, and they go, and then bulls get a couple legs higher. I always get those two mixed up. Here's one leg, that's a pullback, and that was met, and then the market's breaking above the EMA, and look, that was met. So really cool. Kind of see like, okay, this is a leg, so I use the leg one, leg two move. Oh, this is a breakout, so I'm using the breakout tool. They're both Fibonacci extent. They're both forms of Fibonacci tools, but they're just used to use. They're both projecting breakouts, just from one's from a pullback and one's from a breakout. We'll go over the leg one, leg two moves. This is a breakout to me, but you could do a leg one, leg two right here, and that is met. You could put it from the pullback or here. It's pretty shallow with the gap up. The context is good. You could buy that and go for a move up. That was also met 2 times. If you buy this, put a stop 1 tick below. So there was a lot of trades today. It was buy the close rally, first pullback here. So we go from bar 10, pull back here. Look, and that's met. And this is why I started doing it from the actual pullback, not where I enter, because if we do it from where we enter, like here, you get trapped in about 2 hours of sideways price action. But look, from the actual pullback, it's met. So that's its leg two move, that's met right there. Bears get their leg one, leg two move from the top of the pullback. Top of the pullback, it goes down. This is also a form of a wedge right here. It's a bear channel. Someone was talking about high ones and high twos, if to assume every second entry is a high two, and that's not necessarily true. Every second entry is kind of like a high two. Like, see how this is a, so this is like a pullback, high one, pullback, high two, but this high two is still in the form of a bear channel. So if you bought this close, you'd be sitting sideways. However, if you bought this close, you could take it for a quick scalp, because now you're breaking out of the bear channel. So this could be like your high one, pullback, high two. The high two comes at a worse price. That's what I'm trying to get at, is as long as the high two and low twos come at worse prices. This is a low two. That's a good example of a low two. As long as they come at a worse price, then you know, because a high two and a low two, you're paying for more information. That's why you want it at a worse price. So a better price is lower for the bulls. A better price is higher for the bears. A worse price is lower. So let's say this is a breakout. This bar 62 is a pullback. Here, that creates a new low after pullback. They get another pullback, and then look at bar 65. That's extremely lower than bar 63. So that's more information, right? We get more information. We understand the breakout is going. We have more confirmation. So our stop is wider. What are we talking about? Low twos, yeah. So it comes at a worse price because we're getting more information. Here, it's about more 50-50. It's a channel. It's a range, I mean. You know what I'm saying? So it's 50-50 here, but we're paying for it. That's a good low two. And it did lead to a trade. We really shouldn't be looking for low twos in the bull trend, though. It's better to be just buying all the breakouts. Where are we in the market cycle? Did I even finish leg one, leg twos? Here's a breakout here. See, top of this range, low. That's met. And then here's another breakout. We're here, and then we can do, oh, that's a leg 1, leg 2, excuse me. Clean this up a little bit. I don't even know why I drew that, but that's also a bear channel breaking out and then retesting. Bear channel with a bullish breakout. I wanted to do this. Look, that was meant to the tick. Really cool. Where are we in the market cycle? Overall, we're in a range. Here's a big range. Where are we in the market cycle? Looks like we're trending higher. We had a breakout, pull back, breakout, pull back, and now we're in a bull channel. Bulls reclaim the EMA. However, we are trading at the high of a range. So last time we were here, we turned around right here. So we'll see what happens tomorrow. It'll be interesting. Daily time frame on the left, 45-minute time frame on the right. Daily time frame, we've been following this channel. It's just above the EMA. We've seen we're getting a lot more touches, a lot more sideways price action. Over here, we'd break out, go for a small buy the close rally, pull back, buy the close rally, pull back. But now look, it's going more sideways. There's not too many buy the close rallies on the daily. So we're going, is this the daily? Yeah, this is the daily. So we're going more sideways. We're testing last week's high. We are kind of closing above, we barely closed above last week's high, so we'll see if we go sideways or they get continuation again. 45-minute chart is right here. So this brown line is that brown line. Same chart here and here. Lower high, double bottom, wedge top. We'll see what happens. We are getting close to the channel highs. See right here. That's that right here. So maybe we pop up and sell, or maybe we break out, or we go sideways. It'll be interesting to see what happens. If you guys are watching this, I think it's Friday. So I hope you guys have a good weekend, have a safe weekend, study, do some playback, feature stuff, use your stop loss, don't oversize like your boy over here. Oh my gosh, real quick, I oversized on this day. I oversized, and I didn't buy the dip. I didn't short. I went short, but I went short with so much size that I kept like for instance, I went short here, and it went down like 20 micros. That's 2 E-minis. It went down, and I got out at the top here. Then I wait for like right here more confirmation. I get short like 10 or 15 contracts on the micros, which is like a mini and a half. I get out on this pullback. Oh my god. Then I go one contract here, and I get out as the price goes sideways here. And it was just a huge mess. It was all bad. So I'm just taking a small break from actively trading. I'm still watching the markets. I'm not gonna get this payout, but I still am gunning for a payout. But I'm just gonna have to take my time. Hope you guys are doing good using stop loss. Thank you for your support and dropping comments. I trade the Emini exclusively right now from a price action perspective developed by Brooks. I study Brooks. I make these videos so I can learn how to talk about the markets and study leg 1, leg 2s in the market cycle. Hope you guys have a good one. I'll talk to you guys later. Thank you. Bye.